Buying a home in Kansas City in the next decade is going to be more challenging than ever. Let us tell you why, and more importantly, how you can still make it happen.
Hey, we're Kat and Melanie with the 𝗪𝗗𝗘𝗍𝗂 Group, and today we're diving into one of the most important topics for future homebuyers: housing affordability and the future of real estate in Kansas City. If you've been watching home prices climb and wondering if you'll ever be able to buy a home, you're not alone. We're here to break it all down for you.
We work with buyers and sellers every day, and we see firsthand what's happening in the Kansas City market. We also stay connected with top real estate experts, lenders, builders, and industry professionals. So we're constantly tracking trends, policy changes, and new opportunities that impact home buyers like you. Whether it's rising home prices, shifting interest rates, or zoning changes that affect where and how homes are built, we're staying ahead of it all so that you don't have to.
Here's what we'll cover in this video: why home ownership is getting more expensive in Kansas City, how build-to-rent developments and zoning changes are impacting buyers, what's happening with interest rates and how they affect your affordability, the strategies buyers are using today to navigate the market and succeed, and why waiting might actually cost you more even if interest rates drop.
But why does that matter right now? We know buying a home right now feels overwhelming, and many people are wondering if they should just wait. But here's the thing: while some buyers are sitting on the sidelines, others are finding creative ways to buy homes with little to no money down, negotiating lower interest rates, and getting into properties before competition picks up. The key is knowing what to do and when to do it, and that's exactly what we're going to help you with today.
If you're planning to buy, don't wait until it's too late. Reach out to us. We'd love to help you navigate the market, find hidden opportunities, and get into a home before prices climb even higher. Before we get started, make sure to subscribe so you don't miss our latest real estate updates about Kansas City. And with that, let's dive in.
The first reason we think buying in Kansas City will not be easy is because of something called build to rent. Now, what exactly is build to rent? You might think most new homes being built are for sale, but more and more, that's not the case. Corporations are snatching up entire developments like collecting infinity stones, and they're snapping homeownership opportunities right out of existence. Corporations are building single-family homes and townhouses with the sole purpose of renting them out, limiting home ownership opportunities. Traditionally, newly built homes were marketed to individuals and families looking to buy. However, large institutional investors and hedge funds are now purchasing entire developments to operate as rental communities, reducing the number of homes available for everyday buyers. This shift is making it harder for first-time homebuyers and families to compete in the market because instead of buying from a homeowner, they're often competing against massive investment firms with deep pockets and all-cash offers. Now let's talk about some stats. In 2021, 5% of all new home builds nationwide were built to rent, but 2023, that doubled to 10%. That's nearly 1 million homes per year not available for purchase. The Sunbelt states, Texas, Florida, Georgia, and Arizona have seen the biggest surge in built-to-rent communities, but Kansas City is starting to see this trend too. In the KC metro, areas like Lenexa, Olathe, and Blue Springs are becoming prime locations for these large rental developments, often disguised as traditional suburban neighborhoods. Many of these communities feature attractive amenities like pools, fitness centers, and dog parks, making them appealing to renters, but at the cost of reducing homeownership opportunities. Now let's talk about how this impacts Kansas City home buyers. If more homes are built for rent, it means fewer available for buyers, increasing competition and keeping prices high. Think about it. If a significant portion of new housing is owned by corporations rather than individuals, home inventories stay low, which keeps demands high and ultimately drives up prices. This shift affects resale homes. When a neighborhood is filled with rentals, appraisers may weigh investor-purchased homes differently, potentially affecting comps and resale value. Homeownership is one of the biggest wealth-building tools in America, and when large investment firms control more of the housing market, it creates an imbalance where everyday buyers have fewer opportunities to build long-term equity. Renting instead of owning means that instead of building equity in a home, renters are paying off an investor's mortgage without any long-term financial gain for themselves. For first-time homebuyers, this means adjusting expectations. The Kansas City market is still affordable compared to many other major cities, but we're seeing more competition in the lower price points due to limited supply. As build to rent grows, the key for buyers is to work with professionals who know the market and can help navigate options before the best deals get snapped by investors. Now let's talk about some solutions to this issue. If build to rent continues to limit the numbers of homes available for purchase, home buyers in Kansas City will need to be strategic in their approach. Here are some key solutions. 1, make sure you are taking advantage of down payment assistance programs. Many buyers assume they need 20% down, but in Kansas City there are several down payment assistance programs and grant programs available. Some programs allow buyers to get into a home for as little as $500 down. We work with lenders who specialize in these programs, so if you're unsure of where to start, we can connect you with the right people. Number 2, you can also take advantage of buying a home with FHA, VA, or a 3% conventional loan. FHA loans allow you to buy a home with 3.5% down and more flexible credit requirements. VA loans for eligible military members and veterans require 0 down and offer great interest rates. Conventional loans with 3 to 5% down are available for first-time homebuyers. Number 3, make sure you are looking in up-and-coming areas before investors do. Institutional investors target homes in areas with higher appreciation potential, so finding areas before they become investor hotspots can give buyers an advantage. We help buyers find neighborhoods that still have affordable homes, good growth potential, and low investor saturation before prices increase. Here are some examples of some emerging KC areas to watch. Eastern Jackson County, so 𝗪𝗵𝗵𝗃, Blue Springs, Green Valley, parts of Wyandotte County near Piper and Bonner Springs where there's a lot of development going on out there. Southern Johnson County is always pushing out south, so look at Spring Hill, Gardner, DeSoto. Make sure you do that before prices skyrocket, of course. And Platte City and parts of North Kansas City. These areas are quickly becoming some of Kansas City's best kept secrets for home buyers, offering more affordability now, but likely not for long. Getting in early could mean securing a great deal before demand and prices take off.
So let's talk about some issues homebuyers are having while purchasing their first starter home. Entry-level home prices are rising fast. Remember when gas was under $2 a gallon and Blockbuster was still a thing? That's how it feels looking at old home prices in Kansas City. Good times, but they're not coming back. 5 years ago, we could find a decent starter home in Kansas City for $180,000 to $225,000. Today, that's more like $275,000 to $325,000, a 40% jump. That means if you waited to buy, the same house that was affordable in 2019 now costs significantly more and comes with a higher monthly payment too. In Johnson County, the average home price has now surpassed $400,000, making it even tougher for first-time homebuyers. Even homes in areas that used to be considered affordable, like Olathe or Lenexa, are becoming harder to find under $300,000. For context, the entire Kansas City Metro's median home price was around $180,000 just 10 years ago. We're now seeing even the most basic single-family homes exceed $300,000, a shift that has priced out many buyers. Additionally, income stagnation hasn't helped. The median household income in Kansas City is around $80,000 to $90,000, but home prices have outpaced wage growth, making it harder to afford even a starter home. Historically, housing affordability was based on the 3 times rule, meaning the median home price should be no more than 3 times the median income. In Kansas City, that ratio used to hold, but today's numbers are completely different. For example, in 2015, a household earning $70,000 could buy a home for $210,000 and keep their mortgage payment manageable. But in 2024, even with a $90,000 household income, home prices at $300,000 to $350,000 stretch budgets thin. With current 6.5% to 7.5% interest rates, a mortgage on a $350,000 home comes out to $2,100 or more per month. And that's before property tax taxes, homeowners insurance, and maintenance costs. That means buyers need a much higher income to comfortably afford a home that would have been much easier and within reach just a few years ago. So let's break it down. 5 years ago, a $225,000 home with a 3% interest rate would have been about $1,100 a month. Today, a $325,000 home with a 7% interest rate would be about $2,300 a month. This is why so many buyers are feeling priced out. It's not just that home prices are rising, but the combination of higher prices and higher interest rates is making affordability even worse. On a national level, Kansas City remains more affordable compared to cities like San Francisco, Seattle, and New York, but the trends we're seeing are headed in that same direction. In some US cities, the starter home price is already hitting $1 million. While we're nowhere near that in Kansas City, we're seeing prices move in that direction faster than many people expected. For example, in Austin, Texas, the median home price jumped from $280,000 in 2017 to over $450,000 in 2023, and Kansas City is following a similar trajectory. Some buyers are already being pushed out of Johnson County and parts of Lee Summit and looking at more affordable areas like Grandview, Blue Springs, or Belton. The reality is that homes under $250,000 are becoming increasingly rare, and buyers who want to stay in that range may need to consider living a bit outside of the main metro area or choose a condo, townhome, or fixer-upper. So, should you wait for interest rates to drop? A lot of buyers right now are tempted to wait for interest rates to go down before buying a home. And we get it, seeing rates at 6.5% or 7% when we had 3% just a couple of years ago is frustrating. But let's talk about why waiting might actually cost you more in the long term. First off, interest rates likely won't drop much lower. We've been spoiled by historically low interest rates over the last decade, but those were the exception, not the norm. The truth is, the rates we're seeing today are actually pretty typical when we look at historical data. Over the last 50 years, the average mortgage rate has been 7.75%. That means today's rates are actually in line with long-term trends, and hoping for them to drop back to 3% is unrealistic. Even if the Federal Reserve makes small rate cuts in 2025, we are not expected to see mortgage rates below 5% anytime soon. Most experts predict rates will settle somewhere between 5.5 and 6.5 over the next few years. While that may seem like a slight improvement, it won't drastically change your affordability. Here's an example. At a 7% interest rate, a $350,000 home would be about $2,500 a month, depending on your down payment. But at a 5.5% interest rate, the same house would be about $2,200 a month. Yes, that's about a $300 a month difference, but if home prices increase by 10% or more due to competition, you could end up paying way more overall. Secondly, if rates drop, prices and competition will surge. If interest rates do dip below 6%, we're going to see an explosion of buyer demand. That means more bidding wars, higher home prices, and more people making risky compromises just to win a house. We saw this happen during the pandemic when rates hit record lows. Buyers were waiving inspections, paying $50,000 over asking price, and even willing to write love letters to sellers just to get their offers accepted. So if rates drop again, the same thing is likely to happen. And suddenly, buyers who were waiting to save on their mortgage rate will end up overpaying for the house itself. So in summary, here's what's going to happen if interest rates do drop. More buyers flood the market, increasing demand. Sellers get multiple offers, pushing prices up. Buyers feel pressured to waive inspections or contingency to win. Homes that were sitting for weeks suddenly get 10 or more offers overnight. And buyers who have been waiting could pay more for the same house than they would today. Right now, buyers have more leverage. In many cases, we can negotiate for seller-paid closing costs, interest rate buydowns, and even price reductions. Once competition heats up, those opportunities may disappear. Something you could consider doing is buying now and refinancing later. The good news is that even if you buy now at a higher rate, you're not stuck with it forever. Most lenders offer refinancing options when rates drop, meaning you can lock in your home price today and refinance to a lower rate down the road without overpaying in a bidding war. We always remind buyers you can change your mortgage rate later, but you can't go back and buy at today's home prices once they've increased. As an example, if you buy a home at $350,000 today at 7%, you secure your home before prices rise. If rates drop to 5.5% in the future, you can refinance to lower your monthly payment. If you wait and home prices increase by 10 to 15%, you'll pay more overall even with a lower interest rate. So moral of the story is that the best time to buy is when you are ready. We understand that buying a home is a big decision and timing matters, but if you're financially ready, the best time to buy is when you can afford it, not when you're trying to predict the market. If you wait for rates to drop, you may save a little on interest, but end up paying thousands more for the house itself. Right now, buyers have the chance to get into a home with less competition and more negotiating power, an opportunity that likely won't last once the market shifts again.
Now let's talk about rising density and housing policy changes in Kansas City. Kansas City and Johnson County are seeing significant zoning changes that allow for higher density housing, including duplexes, fourplexes, and townhouses in areas that were traditionally zoned for single-family homes. This is part of a broader push for missing middle housing, a term used to describe housing types between single-family homes and large apartment complexes. Cities across the metro, including Overland Park and Lenexa, are adjusting zoning laws to allow for more density, particularly near transit hubs and growing commercial districts. While the goal is to create more affordable housing options, these changes also raise questions and what it means for homeowners, neighborhoods, and future home values. Some examples of where this is happening in Kansas City. Overland Park has approved several high-density projects near Metcalf and College Boulevard and along 75th Street corridor, aiming to provide more housing near job centers. Lenexa City Center is growing with a mix of apartments, townhouses, and live workspaces, signaling a shift towards urban-style density in what once was a more suburban area. While some people may like that Overland Park and Lenexa are adding more townhouses and multi-unit developments because it's great for affordability, but if you move to the suburbs for extra space, you might start to feel like Simba in The Lion King when Mufasa says, "Everything the light touches is now a duplex." Kansas City, Missouri has been actively increasing density along its streetcar expansion route, with major projects in Midtown, the River Market, and soon to be the Plaza area developments. Now, what does this mean for home buyers? On one hand, higher density housing can create more affordable home options for buyers who may be priced out of traditional single-family homes. On the other hand, duplexes, townhouses, and small multi-properties tend to have lower price points and can offer a more budget-friendly path to homeownership. For those looking to house hack, buying a multi-unit property and renting out part of it, these zoning changes may actually create new investment opportunities. Here's some potential benefits for buyers: more affordable entry points into the housing market, new options for multi-generational living or house hacking, increased walkability and access to transit in some areas. Here's an example. A buyer who may have been only able to afford a condo in the past could now buy a duplex or a townhouse in an area that previously only allowed single-family homes. This allows them to build equity while still having lower maintenance costs than a detached home. Now, here's the downsides of increased density for homeowners. While some buyers may benefit from increased density, homeowners who already own in traditionally single-family areas may see their property values and neighborhood dynamics shift in a way they didn't expect. Adding duplexes, triplexes, and fourplexes to neighborhoods with mostly detached homes could change the character of the area, potentially leading to higher traffic, less parking, and concerns about short-term rentals or investor-owned properties. It's also worth noting that higher density doesn't always mean more homes for sale. Many of these projects are built to rent rather than to own, meaning that we could see a rise in institutional investors buying up new multi-unit housing instead of local buyers. To sum up, here's some potential downsides for homeowners: increased rental properties in traditionally owner-occupied neighborhoods, more traffic congestion, parking challenges, and changing community feel, potential for investor purchases driving up property prices, some buyers may hesitate to purchase in areas undergoing rapid zoning changes. Here's another example. If a buyer purchases a single-family home in an area that later allows higher density housing, their house may be next in a row of duplexes, which could affect resale value and market desirability. Let's talk about how this affects property values and resale potential. If you're buying a home in an area that may see zoning changes, it's important to think about how future density could impact resale value. In some cases, increased density can be a good thing. More development can bring better amenities, public transportation, and commercial growth. However, it can also mean less privacy and a shift in neighborhood appeal. For buyers who plan to stay in their homes long term, it's smart to research any upcoming zoning changes before purchasing. Some areas may retain their single-family character, while others may see a mix of apartments, townhouses, and higher density housing in the coming years. Here are some things you as buyers should consider before purchasing. Is this area likely to change under new zoning laws? Are new developments for rent or for sale? How could increased density impact future resale value? And will additional housing bring better amenities, or will it create congestion? So what should buyers do now? For buyers considering a home in Kansas City, it's more important than ever to research what's happening in the neighborhoods they're looking at. We help our clients stay informed on zoning changes, upcoming developments, and areas where density could impact home prices and values. If you're wondering how these changes affect you, let's talk. We can help you find a home that aligns with your long-term goals while avoiding potential surprises down the road.
Let's talk about the future of buying a home in Kansas City. There are some challenges ahead. With fewer homes for sale, rising prices, and stagnant wages, the next decade is going to be tough for homebuyers in Kansas City. The housing market is shifting, and while there will always be opportunities, buyers will need to be more strategic and proactive than ever before. Inventory remains historically low, and with builders struggling to keep up with demand, we're likely to see continued competition for available homes. At the same time, rising property values mean the longer buyers wait, the more they'll need to spend to get into the market. Home ownership is still one of the best ways to build your wealth, but affordability concerns will push more buyers to consider alternative strategies to secure a home.
Now, what does this mean for buyers? Buyers can expect continued low inventory and rising home prices. Interest rates may fluctuate, but significant drops are unlikely. Buyers who wait may find themselves priced out of certain areas, and creative financing and down payment assistance will become more critical than ever.
The good news is that there's still a way to buy a home. Despite the challenges, we see buyers successfully purchase homes every single day. Because the truth is, if you're determined and work with the right professionals, there's always a way. Many of our clients have secured homes with minimal upfront costs thanks to down payment assistance programs, seller paid concessions, and creative financing strategies. We specialize in helping buyers find hidden opportunities, whether that's identifying homes that have been overlooked, securing lender incentives, or negotiating terms that make home ownership possible.
Here's some ways buyers are making home ownership work. Utilizing down payment assistance programs to buy with as little as $500 down, negotiating seller-paid rate buydowns to lower monthly payments, exploring house hacking opportunities to generate rental income, looking in and upcoming neighborhoods before prices rise further.
Here's a buyer success story and how we helped one Kansas City couple buy for just $500 down. A young couple had been renting in Kansas City for years, paying nearly $2,000 a month in rent. They wanted to buy a home but thought they needed 20% down, which would have been nearly $60,000 on a $300,000 home. When they reached out to us, we introduced them to a lender who specialized in down payment assistance programs. We also found a motivated seller who was willing to cover some of their closing costs. With this strategy, they were able to buy a 3-bedroom home with just $500 down, and their mortgage payment ended up being $400 less than what they were paying in rent. Now, instead of throwing money away on rent, they're building equity in their own home, and when interest rates drop, they'll be able to refinance for an even lower payment. The takeaway here is that if they had waited another year, the same home could have been $30,000 more expensive, and they would have missed out on the opportunity to buy before prices increased further.
So as you can see, the Kansas City housing market isn't going to get any easier in the coming years, but that doesn't mean buying a house is out of reach. The most important thing is to have a plan and work with people who understand the market. If you're thinking of buying a home in Kansas City, reach out. Our team would love to help you make home ownership a reality. We can guide you through financing options, connect you with lenders who specialize in first-time home buyer programs, and help you find homes that fit your budget before competition pushes prices even higher. Drop a comment below if you have any questions, and don't forget to subscribe for more Kansas City real estate updates. Let's make home ownership happen for you. We're Kat and Melanie of the Lewis Higdon Group, Kansas City Realtors. And remember, there's no place like home here in Kansas City.